Let's start with a simple question. If a dealership offers you a loan at 0% interest, who's paying for it? Because nothing in a car transaction is free. The manufacturer, the dealer, the finance company, they all have professional accountants, and those accountants make sure every deal is profitable before it's ever offered to you. The 0% financing offer is no exception. It's a carefully structured product where every party on the business side of that table knows exactly what they're making. The only person who sometimes doesn't know is the one signing the paperwork. That's what this video is actually about. Not whether 0% financing is good or bad. The honest answer is it depends entirely on your situation. But you need to understand the full picture first. Who profits from this deal, how they do it, and what that means for the decision you're about to make. By the end, you'll know exactly what to do based on where you stand financially. Let's get into it.
The real mechanics, how every party makes money. There are three parties on the business side of a 0% financing deal: the manufacturer, the dealer, and the captive finance company. All three profit. Here's how each one does it. The manufacturer is the one actually paying for your free interest. When Ford or Toyota offers you 0% APR, APR stands for annual percentage rate, the true annual cost of borrowing. They're covering the interest that a bank would normally charge you. On a $42,000 loan at a market rate of around 6.9% for 60 months, that interest totals roughly $6,950. The manufacturer pays that amount as a subsidy to their finance arm. Why would they willingly give away nearly $7,000 per car? Because it sells cars fast. Manufacturers use 0% offers to clear inventory, hit end-of-quarter sales targets, and move specific models that aren't selling well. When you see 0% APR on a particular trim or model, that's frequently a signal the manufacturer needs to move those units. They're not being generous, they're solving an inventory problem. And there's one more thing most buyers never think about. That subsidy cost is already baked into the MSRP. The sticker price of a car is set with the full knowledge that a percentage of buyers will receive subsidized financing. The price was built to absorb it. You're not getting something for free. You're receiving back, in the form of interest savings, something that was already priced into the car. The captive finance company, that's Ford Credit, Toyota Financial Services, GM Financial, receives the manufacturer's subsidy payment. But they don't just hold your loan for 5 years. They package thousands of auto loans together and sell them to institutional investors on Wall Street as asset-backed securities. They collect servicing fees throughout the life of the loan. Even at 0% to you, they're generating revenue from the securitization of your debt. Your loan becomes their product the moment you sign. The dealer makes money in two ways, and the second one is where most buyers get caught off guard.
The first way is straightforward, holding MSRP. When 0% financing is on the table, the dealer has no reason to negotiate on price. The financing offer is the concession. It's already cost the manufacturer nearly $7,000 per vehicle. The dealer simply keeps full margin. The second way is the Finance and Insurance Office, the F&I office. This is the room you sit in after you've agreed to buy the car, where someone walks you through a menu of add-ons: extended warranties, gap insurance, paint protection, credit life insurance. This office is frequently the most profitable part of an entire dealership. Average F&I profit per vehicle runs between $1,500 and $2,500. And here's the psychological mechanism that makes it work so well with 0% financing. You just got a great deal on interest. You feel good. You're relaxed. You're far more likely to say yes to things you'd otherwise question. The dealer earns a flat fee from the manufacturer, typically $200 to $500, for every car financed through their captive lender. Add full MSRP margin, plus F&I profit, and a dealer on a 0% deal can easily clear $3,000 to $5,000 on a transaction where you walked out thinking you won. None of this is illegal. None of it is hidden. But it's also never explained to you. The system is designed to be navigated without you understanding how it works. Now you do. Step number 1. Know which situation you're in. The math changes completely. There's no single right answer on 0% financing. There are 3 different situations, and each one has a different correct move. Figure out which one is yours before you walk into a dealership.
Situation 1. You don't have the cash. You'll be paying from monthly income. This is the most common situation, and the one where 0% financing is most clearly, simply beneficial. You need a $42,000 car. You don't have $42,000 saved. You'll pay $700 a month from your salary for 60 months. At 0% APR, Every dollar of that $700 goes directly toward the car's price. Total paid after 5 years, exactly $42,000, not a cent more. Now compare that to financing at 6.9% APR. Monthly payment rises to $741, and over 60 months, you'll pay $44,447. That's $2,447 handed to a lender for nothing. You bought the same car and paid $2,447 extra. In this situation, 0% financing is straightforwardly better than any standard loan, as long as you don't give that saving back in the F&I office. Which brings us to the strategy below. Situation 2. You have the cash but want to keep it invested. This is more nuanced, and the math here is often misrepresented, so let's be precise. You have $42,000 saved. You take the 0% loan and invest that $42,000 in a broad index fund at a historical average of 8% annually. Now the question is, where does the $700 monthly payment come from? If you withdraw $700 each month from your investment to make the loan payment, the compound growth applies to a shrinking balance. After 5 years, you'll have approximately $11,140 left in the portfolio because you pulled $42,000 back out to fund the payments. That's still $11,140 more than if you'd paid cash and invested nothing, but it's not the dramatic gain that's often advertised. If you pay the $700 monthly from your salary and leave the investment completely untouched, the $42,000 compounds to roughly $62,574 after 5 years. But in that case, you've also spent an additional $42,000 from your income over those 5 years. You need to honestly account for both. The bottom line, taking the 0% loan and investing the cash is mathematically better than paying cash, but only if you actually invest it and don't spend it on other things. Be honest with yourself about your track record before deciding this is your situation. Situation 3. 0% isn't available and you're comparing a negotiated price to a standard loan.
Here the math is unforgiving. At 6.9% APR, a discount needs to be more than $6,600 before the interest savings of the negotiated price overcome the interest cost of the loan. A $4,500 discount sounds significant, but at 6.9%, that saves you nothing. You'd pay $4,500 less for the car and $6,950 more in interest. Net loss, $2,450. At 4.9% APR, you'd need more than $4,850 off. At 7.9% APR, over $7,400. The rule holds. The higher your rate, the larger the discount needs to be before it makes mathematical sense to forego 0%. Step number 2. How to negotiate regardless of which situation you're in. Whether you plan to take 0% or not, this sequence protects you in every scenario. First, negotiate the purchase price as if you're paying cash. Don't mention financing. The moment you reveal you want 0% APR, the dealer knows they don't need to move on price. The financing offer closes the deal for them. So negotiate the vehicle price first. Get their best number and write it down. Then ask, what would that price look like if I financed through you at 0%? Now you have both figures. If they won't reduce the price for 0% financing, which is typical, you have what you need for a total cost comparison. If they flex slightly, you're in an even better position. Either way, you've made them show you both sides of the equation. Second, prepare for the F&I office before you walk in. This is not a formality. This is where a skilled professional will present you with products at elevated prices in a low-pressure but high-momentum environment. Know in advance what you'll consider and what you'll decline. Gap insurance, which covers the difference between what you owe and what the car is worth if it's totaled, can be genuinely useful in the early years of a loan, but you can often buy it cheaper through your own insurer. Extended warranties are almost always available later and almost always negotiable in price. Don't decide in the room. Tell them you'll think about each item separately.
Third, never negotiate a monthly payment. Can we get you into something around $700 a month is a redirect. It's designed to pull your attention away from total price. Bring it back every time. Total purchase price, total dollars paid. That's the only number that matters. Closing, the honest summary. Every party on the business side of a 0% financing deal profits. The manufacturer moves inventory and recovers the subsidy through MSRP pricing. The finance company packages your loan and sells it to investors. The dealer holds full margin and earns $1,500 to $2,500 more in the F&I office from a buyer who feels relaxed because they got a deal. The system is not designed against you, it's designed around the assumption that you won't run the numbers. Here's what running the numbers actually tells you. If you're paying from monthly income with no savings, 0% financing saves you $2,447 compared to a 6.9% loan on the same car. Take it and say no in the F&I office. If you have the cash and genuine investment discipline, taking the 0% loan and investing the cash leaves you with roughly $11,140 in portfolio gains you wouldn't otherwise have. That's real money, but only if you invest it. If 0% isn't available, you need more than $6,600 in discounts to beat it at 6.9% APR. Run the specific numbers for your offer before you decide. The accountants on the dealer's side run these numbers every day. They never miscalculate. Your job is simply to do the same for yourself with your actual figures before anyone in that building asks you to sign anything. If this video helped you think through the math, share it with someone who's about to buy a car.
Subscribe to the channel if you want to understand money better than most people around you. Here you will learn not just to earn, but to manage your finances so that they work for you. Watch the next video and take another step towards financial freedom.